Good morning, everyone. My name's Johnny Thompson. I am Marketing and Communications Director at RiskSTOP Group, and many thanks for joining us for our latest risk management webinar at RiskSTOP. Now, today we're looking at a risk that's, I guess, has really flown up the agenda, the risk management agenda in recent years, and I think that's probably because we've all become a lot more aware of really the huge extent of the problem of buildings underinsurance, and not only the consequences that it has for policyholders, but also for brokers and insurers as well. And we'll have more on the scale of that problem shortly. Today, I'm delighted to be joined by Ewan Sanderson, who many of you will know as our broker and networks relationship manager, working largely with the rebuildcostassessment.com brand, which is part of the RiskSTOP group. And Ben Richmond, one of our highly experienced surveyors and also technical support manager, who will be looking at many of the technical aspects of this and hopefully answering some of your questions as we go through. And please feel free to ask questions as we go. My role, although I'll be pitching in here and there, will be largely to just keep an eye on the chat. And as I say, feel free to ask any questions as we go through. The guys don't mean to be interrupted as they go through the presentation, although there will be time for questions towards the end. So without further delay, let me begin by passing over to Ewan, who's going to talk a little bit about the scale of the problem and the consequences of buildings underinsurance. Over to you, Ewan.
Perfect. Thanks for that, Johnny, and morning, everyone. Really appreciate your time by joining us here. So if we could have the next slide, please, Joe. So as Johnny alluded, there is a big problem with under and over insurance in the UK property market. The graphic on the left showing the UK is the data we produce every year. This is our data up to September 2024. And it basically showed that 76% of properties we assessed were actually underinsured, okay, which is obviously a big problem. And I believe it's something about 20% were overinsured, okay. Now, what does worry us more here at RiskSTOP is the amount of underinsurance. As you can see, that the underinsured properties were only insured for about 2/3 of what they should have been insured for. I don't have to tell you what's going to happen if there's a claim, if there's a loss, and there's that amount of underinsurance, okay? We can make things a bit simpler. A good analogy is, let's say you're walking down High Street, okay, and you look at 10 properties. 7 of those will be underinsured on average, 2 will be overinsured on average, and only 1 will have correct insurance on average. Although truthfully, they could all be underinsured, okay, as you're walking down that street. Now, the big problem, obviously, with underinsurance is claim shortfalls, the average being applied, and some businesses will actually fail because they cannot afford to stump up the funds for the shortfall when the average is applied. It can be worse than that. The insurers could class the underinsurance as being reckless, okay, if the client is that underinsured. And we've seen some examples ourselves, I'm sure you all have, where the insurers are rejecting the claim in its entirety, okay? That's obviously the worst case scenario and is no good for anyone out there. Next slide, please, Joe. Okay, over to you, Ben, if that's okay.
Brilliant, thanks, Ewan. So some of our key areas of concern, these aren't new areas of concern, but they are the major factors which we're seeing and all play into the importance of underinsurance and keeping an eye on it. So we've all lived and breathed the issues around rising construction costs, and we all remember the lockdown examples of no one could get sand, no one could get concrete, etc., etc. So those issues have always been around. They've made the mainstream news much more recently. And we've always found that year on year, the construction costs overall are going up. What we're finding now, though, particularly over the last sort of 12, 15 months, is actually it's not the material costs which are really pushing everything up. It's the labour costs. and one's been the consequence of another. So we've had a period of years where material costs have been expensive. That has effectively reduced the amount of construction. That's led to the reduction of the amount of construction labour force, and effectively people exiting the market. Now, as we move back into a period of construction, some of it government funded and otherwise, the problem is really coming down to lack of labour. So it's now labour pushing up construction costs here. We also have the key area of concern is around market value and rebuild costs.
Ben, do you mind if I just interrupt 1 second? Because I did say I was happy for people to raise questions as we go through, and Oliver's just raised a question about some of the figures that Ewan was mentioning, and he said, could you confirm how many properties were assessed to determine the 76% underinsured figure? That's based on our latest 30,000 assessments that have been carried out through the rebuildcostassessment.com brand, Oliver. So yeah, quite hefty numbers there. And if you go to the rebuildcostassessment.com website, you can find the infographic there with more information around that, and that's actually broken down. The most recent one's broken down into regional variations as well, so you can see how underinsurance is affecting different parts of the country. Apologies, Ben.
No problem.
I hope that answers your question, Oliver. And yeah.
Actually just something I learned the other day, because I think that's an infographic you mentioned there, Johnny, on our website, which is there to be used by people to go with customers and stuff. It's like printable and everything.
Definitely, yeah. It's a very good article to show to your clients. It kind of shows them it's not just them who are under or overinsured. It's the whole of the UK, basically. Okay.
Yeah. Brilliant. Okay. So into the second segment there, the key areas of concern. As Ewan alluded to, we see a lot of people believe that they do actually have the correct insurance in place, and it must be right because it's the market value. It's what they bought the property for last year, last week, last month, 2 years ago, and it's been indexed. So it must be right because pound notes changed hands. It's a complete fallacy. The market value is not the same as a reinstatement value, and it's absolutely critical that people understand that. A market value is what a person would pay for your customer's legal interest in a property, whether that's freehold, leasehold, long leasehold. It's that legal interest. It is absolutely not how much it is going to cost to rebuild it from scratch. So just to be clear on that, a rebuild cost assessment should, in order to make sure that we don't fall into this underinsurance, a rebuild cost assessment should be done on a total loss basis, assuming a catastrophic loss. So just those two phrases alone do not contain anything to do with market value whatsoever. So just a word to the wise, market value does not cut the mustard when it comes to being tried to describe it as sums insured. We know there's lots of policies out there based on market value because that's the only number people really associate with their buildings. So we're all about trying to explain that, and the more conversations can be had before the products are placed, the better for people to understand.
Just touch on that, Ben. We did a poll at Bieber about 4 or 5 years ago. We asked 600 brokers how the clients were setting sums insured. Again, the article's on a website, but 35% were using the market valuation. So big problems out there.
Yeah. So, and also you have to bear in mind that even with indexation, you're just compounding a problem. So it's really, really important to get to the root of that. The next section there is the regular valuation element to it. The good practice really depends on the type of product which you're looking at. There are lots of products out there, which I think we'll probably touch on in a minute in terms of how you can find a product or a service from a company which helps with this underinsurance. The regularity of those valuations is something always to keep an eye out on. Most site survey valuations will recommend a valid period of circa sort of 3 years, but that assumes that there's diligence indexation done by the brokers and insurers in those intervening periods. The thing to look out for with the regularity is, doesn't matter whether it's a site survey or a desktop element or a sort of hybrid service, is if the property changes, then it needs to be redone. And people have different tolerances as to what is change. Quite frankly, anything which is of a change to a floor area, any addition to a building, quite naturally is a substantial change and needs to be picked up. But also likewise, refurbishments as well, or people putting new fittings in or upgraded bespoke kitchens, all of these things into the residential side is important. And likewise, on a commercial side of things, an old office building is not the same as a brand new refurbished office building in terms of the technical specs of things, the raised floors, the ceilings, the capped cabling, etc., etc. So it's really important to know that if something changes with your customers' buildings, even if they're going, oh, well, it's just a bit of a spruce up and a lick of paint, it does need to be looked at again because the specification will be different. And it's important to make sure that those fit outs particularly are picked up, as well as the usual extensions and the conservatories and the added floors on penthouses and similar to that.
Absolutely.
So in terms of the last block there, which is the emission in coverage, we've sort of touched on that with additional structures already. It's something which we see a lot of, and I think I've touched on it already with the elements of sort of things like conservatories and refurbs and things like that. The element here is actually more making sure that your customers are aware that we need to include everything in this assessment. So to give you an example, if we've got a house with swimming pools, tennis courts, and structures like that, these things need to be included, even if the customer is unsure or says, well, I wouldn't really insure it. And the reason they need to be included is because insurers want to have an overall picture for the property, an overall value. And if worse comes to worse and there is a claim, then these are all the items which are picked up by loss adjusters and pulled into the overall total. So it doesn't work just to say, well, we wouldn't do it. And we need to look at that in the whole of things. So this is disused buildings. This is, oh, well, that's the barn over there. We've never used it. But it's a grade 2-star listed building. It's going to have a substantial value. And if these things are missed, then effectively you've got an underinsurance of your own making in terms of the customer's perception. And then obviously if there's a claim, there's an issue there. So it's really important to be able to pick that up. If I give a sort of example, we do quite a lot of work in the garden centre world, things like that. So you've got these things tend to be large out of town retail structures, as we all know, and they tend to have quite extensive car parking, etc. Broadly speaking, on average with garden centres, etc., we'd expect to be putting anywhere between £500,000 and £750,000 worth of value into an assessment purely for tarmac car parking. So these numbers are big, and it's really, really important that you don't have any emissions in coverage and all of the structures are picked up.
Perfect. Yeah, just touch on that, Ben. Really, really good point. A very good reason, again, to run a rebuild report is we will identify all of the structures. We've seen it so many times where we've sent a report over to a broker or an insurer and they weren't aware of that extension that the client built 2 years ago, which is a 25% footprint of the actual property. So, yeah, really, really important to pick everything up as well.
Are there any aspects, Ben, that should be excluded?
So, from our point of view, realistically, no. We try and say, don't exclude anything. The sort of good working practice is to really draw the line at sort of soft landscaping. But I mean, I touched on car parking. If again, into a residential sort of context, you're talking about patio paving, resin driveways, all of these things are expensive items. And, you know, they very quickly come into tens of thousands of pounds. So from a rebuild cost assessment point of view, we would expect, in the event of a claim, etc., and the sort of industry standard, we would not include soft landscaping, but effectively anything other hard landscaping would be included. So yeah, it's very, very rare that we would exclude anything. And what I'd go on to say, actually, John, it's a good question, is if you've got customers who are insisting that an item is removed or not going to be removed, it's good practice. Certainly what we encourage is we're more than happy to include it and put it onto the report. And then it's out there in the open, it's had a value on it, and then insurers and brokers and customers can all decide together. It's more important to have it on there than just to go, oh, it'll be okay. So yeah, it's really critical.
Excellent.
To the next slide.
Yeah, next slide, please, Joe.
Just before we go on to the next slide, sorry guys, there's a hand raised from Ty Harris. So I think we've got a question coming in there. So Ty, I'll just unmute your mic now if you wanted to ask that question. Ty, you can unmute yourself now if you want to ask that.
We've got one from Jackie as well, James.
Jackie, okay, I'll allow that as well. Okay, Jackie, if you want to unmute yourself.
Hello.
Hi there. Hi, Jackie.
Sorry, I've just been a real pain. I can't see any of your slides, so can you email me the presentation after?
Yeah, that's absolutely no problem.
Yeah.
I'm not sure why I have the problem with that, Jackie.
I don't know. I did try coming out and going back in, and I don't want to interrupt because you're on a flow, but I'm following anyway.
We need a rest.
No problem. Thanks, Jackie.
Cheers, Jackie.
Thanks, James, as well, for bringing that in. Yeah. Yeah, next slide, please. Okay, yeah, this is we wanted to bring in as well, and I'm gonna pick this slide up. We wanted to bring in a real life example, because we often talk about the broader statistics as Ewan has covered with this, but we have to remember we are talking about individuals who either own a business or own a residential property. And this is a case that I came across a few years ago, where it was a family occupied guest house and very nice restaurant, which was also the family's home as well as a business, and they had insured that property for 700,000, and the actual rebuild cost should have been was 1.1 million. So the sums insured should have been set at that figure rather than the 700,000. And unfortunately, there was a significant fire at that property, and although it wasn't entirely destroyed, the claim itself amounted to around about £650,000. And as a consequence of that, it had to be reduced. The payment needed to be reduced by around 40% due to the average clause, leaving a £260,000 shortfall. And like I say, that tends to be what we focus in on when we talk about these cases, is the financial impact of these incidents, which, as you can see, were significant. But there's more often to these cases than just that. Obviously, there was prolonged business interruption for the family, and the significant issues, but there was also quite an acrimonious dispute that emerged from this. The really good and strong broker relationship that had been built up over many years suffered as a consequence of that as well. And ultimately, this led to severe stress, with one of the family members actually having being hospitalised. Such was the extent of the stress that they suffered, and even wider negative consequences where the marriage ultimately broke down, as well as the business being lost. And sorry to kind of tell a negative story, but I think, as I said, it's a useful thing to remember that there are individuals and families and business owners behind these cases, and often there are quite emotive outcomes and consequences as a result of underinsurance as well. And from what I'm hearing from the market as well, we're seeing more claims being turned down now as well. So the need seems to be stronger more than ever to make sure that people really are insured for the right amount.
Yeah, I just, sorry, Johnny, I was just going to dive in there, if that's all right.
Yeah, that's fine.
I think it's really important actually to just expand a little bit more on that in terms of the sort of services which people should be looking for when we're trying to find, or when they're trying to find, a service provider for underinsurance. Absolutely, as you said there, it's not just the financial stuff, it's the personal element to it. And it's important, if you're looking to find underinsurance, that you also obtain an estimate on the duration of the construction period. So you've got two sections. You sort of have a pre-construction period and a construction period. So definitely good practice, best practice is to make sure your service provider can give you an element of that. And the reason it's important, it's not just the business interruption, loss of trade, loss of profit and all that sort of stuff. It just sort of really rang true as you use it in this example, Johnny. You've got a property which is no longer habitable by a family. So you also need to make sure that there's alternative accommodation for that family. You also need to make sure that it's actually of a half decent quality, it's suitable, fit for purpose for people who are already in a distressed situation and they're moving house forced upon them. So it's really important to get that duration assessment correct, and also to make sure that it does provide for all of the other sort of outside elements of purely just the business interruption. So yeah, from a personal point of view, locating the family and relocating the family just makes a difficult situation hopefully a little less difficult. So it's definitely one that you should be asking for. Sorry, Joe, jumping over that bit.
No, that's okay. Thanks for that, Ben. I've also got Ty's question as well. Ben, you may be able to help with that. He's saying one of the big issues that he's found is that RCAs are out of date as soon as they're issued with current market conditions, material and labour costs in particular, which you mentioned earlier in the presentation as well. He's saying, whereas of course there is some protection offered if there's an average waiver within there, then that can deal with that. But there is that simple case that many policies won't have that, and you're really relying on that indexing. And he's saying he's not sure he has the answer, but it is another angle. And I mean, it's something worth commenting on as well.
Yeah, I mean, the sort of I picked the first part of the sentence, which was just sort of out of date as soon as they're done. It's down to effectively how professional property people have to conduct valuations. So we talked about market valuations as well. I'm going to sort of, having busy said, ignore all of those, I'm going to bring them in just for the sake of this example, because the property industry, whether we're doing market valuations or whether we're doing reinstatement assessments and everything in between, will always have to do an assessment of a property or evaluation of property on the day they see it or on the day they're instructed upon it effectively. So time is always going to happen, as you quite rightly say, as you say, Ty, and with the sort of rampant costs which we've seen, things inflate very quickly. The important thing, though, is that, and I think we're going to touch on this in a minute with the RICS accreditation and professionalism, is that the property industry acknowledges that. And when there is a claim or a dispute, and those are sort of our language in the insurance sector, if you go to mainstream commercial property, you don't have a claim or a dispute, you're talking about buying and selling. So there's that interaction between two sides of a property issue, shall we say. So what happens is that the professionals on both sides of that equation are mindful that there was a figure done in the past, whether that's a week ago, a month ago, a year ago. And what you get, and we'll touch on it in a minute with the professional elements of understanding that, yes, time goes by, but you're having a meeting of minds taking on board the valuations and the opinions at that date and move them to the date you're actually having that discussion. So it's right to flag it, but it's not quite right to say, well, they're out of date on day one, because where it's around how they're used, and we'll touch on it in a minute, Ty, in terms of it's really important that you get someone who provides this service for you, but also then knows how to use it in a professional way in the industry they're working in. So I think we sort of get there by the way property people work, if that makes sense.
Brilliant, Ben. Thank you very much for that. I've got a comment from Dean. Dean saying we have others in the office who would benefit from this, and he says he notices being recorded, which it is, and when and where will any link be posted, please? We always follow these webinars up with access to the recording by virtue of you registering for this webinar. we will email out to everyone and let you know the where you can access that in due course. And it normally doesn't take, normally takes a few days after the recording for that to be made available to you. So absolutely, Dean, that will be available to you, and you will be able to share that with others in your workplace. So thanks for that. Next slide.
Excellent.
Okay, so I'll take this one on. As it states, how do you stay ahead of underinsurance? How do you ensure your client is never underinsured again? As Ben touched on, the best way is to use a RICS accredited company. They have all the code of conduct, all the ethics, all the PI, the risk transfer in place. They should also have a suite of resources and different products which will fit the property. I'm sure Ben will touch on it a bit more, but obviously we do a lot of desktop assessments at Rebuild Cost Assessment. They're a lot cheaper than a traditional site survey, and they cover off, I would say, 99.9% of what a site survey would actually cover. This allows us to run a lot more reports for a lot more clients to protect their property interests and everything.
I think. It's definitely adding to that. The good thing you get with the RICS accreditation, or just let's call it professional industry accredited service providers, is you obviously get a wide suite of professional standards and statements. And this is the same in whether you're using accountants and they're registered accountants and banks and all that sort of stuff. So there's the very strict set of self-policing rules, and they benefit the customer ultimately. They're not around the society itself. It's all around the customer centric. So you're getting professional standards in here, which also by definition create consistency. So the idea is you can go to an RICS accredited service provider and you'll get a similar level of professionalism. You should get a similar level of assessment subject to individual subjectivity, and you'll get a consistent approach. More importantly for us here, I think in the insurance world, it's also important to remember that an RICS accredited service provider is under obligation to be able to explain clearly to customers how these valuations and assessments have been pulled together, and actually be able to explain them to a non-technical, non-property person. So there is that obligation on the proper regulated companies to make sure they do that. And these are where it really starts to bite, because it's fine for people to go outside of RICS accreditation, and we see a lot of people who want to, they've used an architect, they've used somewhere else before, the estate agent says this, we might have a project manager builder who's built one down the road, and let's be honest, we also get the guy in the pub who always says he can do it for half the amount. So we get a lot of different allegedly sort of qualified or competent people to comment on these things. And what you get with the RICS accreditation is you should get a single voice in a single method. So it's not perfect, but you can start to see how it filters out a lot of other things. And if you do get the worst case situation where you've got a claim and your customer is exposed and needs that support, you've also got someone who understands the property industry, understands how these calculations are put together. Yeah, we see calculations where there is just one number and we don't even know if there's VAT on it, and that's just not fit for purpose when you've got to try and explain it shoulder to shoulder with your customer or with your broker or the insurer. So it's really important from that point of view. You're getting a competent person, and you're getting the ability to have it explained to someone who perhaps isn't fully up to speed with the technicality element of it. So. Small advert over there for us. Yes.
I'm just wondering, Ben, if that guy in the pub is the same guy who knows better than the England manager which players to pick as well. But anyway, move on. That's another matter altogether.
30 minutes to get football into it, Johnny.
Yeah, exactly. I've got an interesting question from Celia, if you don't mind me interrupting. She's saying, do you find the proportion of listed buildings that are underinsured is higher than for other types of buildings? Now, I'm not sure we have the statistical answer to that question to hand, Celia, though we could probably find it if we dug into it. What I do know is higher value properties, interestingly, tend to be less are lower proportionately in terms of underinsurance. Interestingly, we've found over the years that it is those at the lower end that have the highest proportion of underinsurance. But Ben, you probably know from your experience how this works.
Yeah, so you've identified a very specific part of the industry, which it doesn't work to its own rules. But if I can sort of elaborate a little bit more, so. In terms of the overall question, we haven't got the sort of data exactly to hand as to whether there's more instances or not, but the challenges you find with listed buildings, and again, I'm just going to loop back to going, it's really important you get a competent person for a listed building. Quite frankly, the estate agent who's flogging red row homes day in, day out is not the right person to go and do a grade 2-star listed farmhouse in the middle of nowhere. Those skill sets are just not right. So, but what you find with listed buildings is you've got a sort of two parts to it. So, yes, you might find, as we've talked about earlier on, a lot of people have been insuring them using market value. And so we know that's wrong already, as we touched on earlier. But quite often with listed buildings is that because they're quite often seen as liabilities, for a reason I'll come on to in a minute, the actual market value of them is actually lower than people think, because you've got statutory obligations through English heritage, conservation officers, etc., to be able to make sure you can maintain and also replicate in the event of any damage or even refurbishment, etc. You've got to be able to do that to a much more specific standard. So they tend to cost a little bit less to start with, because quite often the roofs are falling in and half the walls finished and all this sort of stuff. But on the flip side, when you've actually got to rebuild it, they are very, very expensive. Not just because you've got the building officer crawling all over every single breath you take and wanting to check the type of floor you're using in the ballroom and all this sort of stuff. It's actually down to, we touched on it, it's actually down to labour and skilled artisan providers. So you've got a lot of decorative stonework, you have a lot of plaster cornicing and all these sort of things which come up quite regularly. But then you're starting to get high-end original marble fireplaces from all sorts of places, and these are actually written in the listing, so you can't go it wasn't there. You've got to go, I've got to go and get another one. So you start to, as you've sort of identified, you start to get an even bigger difference between sort of property value, which people might have used, and actually the rebuild. Overall, the listed buildings are really, really difficult. So part of the sort of trying to stay ahead of underinsurance, and I think Ewan's alluded to it, is also choosing the right product. So there is a lot of remote products, or desktops as people call them out there, and they are really, really good at lots and lots of things, but there are properties they just do not suit. And listed buildings, complex buildings, even if they're not listed, complex materials, we're talking about old timber frame buildings, all of this sort of stuff just do not fit the desktop. You need to have a site survey to really make sure that the details have been found there. So yeah, you're absolutely right. There is a bigger difference, in my opinion, between the two. But again, think about consumer duty, think about all of these things. If you've got a service provider who can offer more than just a sort of one trick pony, then you've already made a really good commitment to your customer about getting the right product for the specific property. And a good service provider will be able to say, actually, yeah, I know you want a site survey, but we could probably do this on a desktop because it's pretty good within the parameters, and also vice versa. So yeah.
Yeah,
it's really
good stuff, Ben. Yeah, good consumer duty as well. Good outcomes for clients. Nice link. Well done. I've got another question on from somebody called Boardroom. Obviously they're in the boardroom. It's a good old VAT. I'm not going to interrupt the flow. I'm just going to save that one till the end now. So what we'll do is we'll crack on with the rest of the presentation, guys, and then bring in any further questions at the end. But we will get back to that VAT one.
Yeah, I've got it.
Thanks, all. So the next one is obviously not teaching anyone to do their job. Just make sure you review your client's policy annually. Okay, if there's been any changes, you may need to get a rebuild done again. The educating clients is a very, very important topic. We try to do it all the time here at RiskSTOP with lots of articles going out. But I mentioned that infographic earlier. Stuff like that is vital to show to your clients, okay? We have articles about the average clause explained in layman terms. All of this stuff, we've got loads and loads of resources on our website you can give to your clients to assist them, okay? And the obvious one also is to monitor construction costs. Hopefully they're settling down a bit now, but obviously we don't know what the Trump tariff effect is going to do globally just yet. It's all over the place. That could put construction costs up. It could potentially put construction costs down in the UK. So watch the space on that. This all, at the end of the day, does lead to risk mitigation, okay? As Johnny just touched on, you've got the sort of governance in place now, okay? So make sure you offer these services to your clients, okay? It's not just about covering your backside, it's to make sure you're doing the best thing for your client. Now, obviously, if there is a claim, the property is underinsured, there's not been a RICS accredited report completed, the client could potentially come after the broker, okay? We all know it's up to the client to set some insured, but we all know a client will come after the broker if anything happens. Big broking groups spend millions and millions a year defending claims, even when they know they're in the right. So it's really, really important to get a RICS assessment done with a risk transfer. And the proactive client engagement, I just really touched on that. You know, often the full suite of resources, not just a rebuild, you know, make sure their company's covered or the house is covered with all the correct assessments, okay? And do speak to insurers. I know this is what you do daily, but will they waive the average if you get a RICS report completed? All of this sort of stuff. Are they going to ensure the premium goes up, the premium goes down if they're overinsured? Okay.
Yeah. Yeah, some good points there, you, and E&O risk in particular. Yeah, significant issue for the industry, and a great way of managing aspects of that. What you mentioned as well about resources, there are a lot of resources, as you see on the rebuildcostassessment.com website, and often we're asked the question, can I use this? Can I share this with clients? Can I share this with policyholders? Yes is the simple answer to that. You don't need to ask. All of that stuff there, you know, we're very keen to get the word out there, and any way that you want to use it, copy and paste, put your own logo on it. Quite frankly, we don't care. The most important thing is that the information gets out there and that people understand the risks that they potentially face. That's our thoughts on that.
Perfect. And don't forget the YouTube channel either. We've got some really good informative animations on there.
Yeah.
Really worth it.
Next slide, please. Yes, I mean, overall conclusion. I can pick this up, you, and just to sum everything up, I guess it is that the key messages are keep reviewing, encourage clients to check and update sums insured on a regular basis, use RICS accredited services, you know, to ensure accurate valuations, and in the face of a challenge from a loss adjuster, it's always good to produce that comprehensive report with that RICS accredited logo on it. It rather changes the atmosphere, should we say, around any potential dispute when the policyholder has that to hand. And yeah, keep informed, follow industry updates. You know, we're back in a period of uncertainty. I'm sure we all are feeling that, and who knows what's going to happen with construction costs and labour costs and so on as we move through the year. So we can keep you up to speed with a lot of that as well. But other than that, I hope that's been of benefit to everyone. As I said, sorry, go on, Ben.
I was sorry. I thought you were something. Did we need to go back to Mr. or Mrs. Boardroom and their VAT?
Yeah.
Question? Oh, you were about to do. Sorry, John.
Yeah, about to do that. No problem, Ben. Yeah. So the question we have there is, give me 1 second. I think that's in the chat rather than in the QA. Yeah, I have a client who has just had a rebuild cost assessment carried out. The client is VAT registered. Let's say the figure excluding VAT is 1 million and including VAT is 1.2 million. Thanks for keeping that nice and simple. Appreciate that. The client has 35% uplift on his policy. My question is, how does this work if the client takes the figure excluding VAT, even though he is VAT registered, if there was a total loss?
So whenever we're faced with the VAT question, we're very proud to say we don't know. Now, that sounds a little bit unhelpful, but if I can perhaps put a bit more sort of detail on it. The element of VAT is remarkably specific to the customer, to the type of property, to the business they're in, and also then the extent of the damage. And without naming too many names, we were in an office of a large, well-known insurer about 15 months ago, and they were saying that they couldn't even get a straight answer from their VAT in-house accountant specialist. So it is very, very specific. It raises, though, a really, really important question about how do we help everybody avoid underinsurance. And when you're going to your service provider, it's important to get with VAT and exclusive VAT figures, because it just helps that clarity. It then promotes the conversation, which clearly Mr. or Mrs. Boardroom, you are currently grappling with. We're not FCA regulated, so from that point of view, we can't give the formal advice, but we do know that VAT is difficult and it is very, very specific. So best practice when you're getting the assessments done, pick out a provider who can make sure that VAT calculations are very, very clear. There are some broad rules of thumb about VAT on fees, on professional fees and demolition, and then sometimes it doesn't actually apply to part rebuilds and full rebuilds. So there's quite a lot of allegorical information out there. Our understanding and our investigation says, I'm afraid it's one for HMRC and your customer. Yeah. So apologies are not helpful, but it's really important to get someone who can actually split those out for you, have a clear report, clearly labelled, clearly understood, and go from there.
Great answer, Ben. That's the one area we, as Ben alluded to, we do kind of walk away from. We'll answer any technical query about our reports. Ben's team will absolutely pick up the phone to yourself or your client. But the VAT, yeah, we do have to walk away because of all the points Ben mentioned. We have got a guide on our website, which kind of helps out a little bit. Now, I'm going to probably get in trouble saying this. Ben touched on, we're obviously not FCA regulated. Now, my personal point of view is if no one knows whether to include the VAT on a rebuild, and the extra 20% doesn't make a huge difference to the premium, I would include it. Because if you don't and you should have done and there's a loss, you're 20% out from day one, which a loss adjuster is not going to be very happy with.
Yeah, I mean, it's one of the reasons why we put it on there, purely just a statement of fact at the end of the day. It'd be the subject of a different broadcast about what accountants do in this role and things like that. But yeah.
Yeah, brilliant.
Yeah, a couple of things. Apparently an apology is required. The QR code that we popped up didn't seem to be working, but James has very kindly popped a link, if anyone was looking for that, a specific link to our rebuildcostassessment.com resource library into the chat. So have a look for a message from James there with that link if you're looking for that. Kev says thank you face for radio.
Yeah,
I know. We all know who he's talking about there.
Oh yeah,
you.
I'll be cancelling your orders, Kevin. That's it.
Yeah, and then he totally agrees on the VAT issue. We do. I believe we have a poll ready. I don't know if we can maybe get that popped up on the screen so that no, there was a problem reaching this app. Somebody needs to click the retry button on that. Oh, we are getting responses.
It's up on my screen now, yeah.
Yeah, we are getting responses coming through, so that's great. In the meantime, let me quickly, because I believe we have quite a few interesting questions as well. We have one which says, from Oliver again, what are your thoughts on the online ABI rebuild calculator? Ben?
So that's an excellent question. So these calculators are indicative at best, is probably how I would describe them. They only capture a certain number of data points and they capture it from an unverified audience. So what I'm trying to get to here, we alluded about the RICS having professional property people. There's phrases such as competent person. So when you're actually getting a service you're paying for, assuming you've got a sort of high quality service we've talked about, you're getting a property person asking the right property questions and interpreting that data in a property professional manner. The online calculators will grab, usually they'll get a postcode, they may or may not narrow down a century as to when the building was built. You've got one option as what it's built from, and you may have to put in some numbers of bedrooms or floor areas, all of which are unverified unless you've actually done the property assessment yourself. So taking that to one side, even if people are comfortable with that data going in, more often than not, those online calculators are also then giving you ranges. And as soon as you're into a range, imagine then going, right, fast forward into the future and there's a claim, and you dust off your free calculation and you go, oh, well, it's a range. So straight away, you've got a difficult situation where you're arguing against a property professional with, quite frankly, a sort of, it's not even a rebuild light. It's a set of data points pushed through an algorithm. So it's important to make sure that you've got something fit for purpose when you've got that hopefully never happens circumstance where another property professional is asking why you valued it at a certain amount. So the online calculators are good to start the conversation. And for me, we don't have a problem with them. They're great because we have a lot of people who go, market value is $1 million. Well, tell you what, I mean, well, no, I don't need to insure it for $1 million. Well, look, put it through an online calculator, 1.5 million. Oh, hang on, that means I've got a problem. So they're good for identifying the problem. They just don't stand up in terms of actual scrutiny in a proper assessment and a proper insurance and property sort of field of engagement, if you want to call it, or negotiation. So buyer beware, I think, is where I am. Also think about the number of data points which the sort of fully fledged version of BCIS, for instance, does. It's a subscription service at large amounts of money for a reason. There is industry data sitting behind it. There is locational data sitting behind it. I'm not saying that's not in the free calculators, but it's to a granular degree which stands up to scrutiny, and it's being driven by competent people. So that sounds like everyone else's income. That's not what I mean. What I'm getting at is specialised property people who know the questions to ask. So yes, but it needs that next step.
Yeah, I was a really good answer, but I'll just touch on that as well. Some of the online calculators, if not all of them, do check their T's and C's, okay? I pretty much guarantee you there'll be some line stating this is indicative, it should not be used to set a sum insured, okay? So we can go back to the E&O, the risk transfer. If that figure's used and there's a claim, there's absolutely no recourse on that company. So again, the client's probably going to come after the broker. Potentially, if you referred them to user calculators as well, that could be an even more dangerous territory to go down.
Yeah, and I think that's important. We don't necessarily want to talk about risk transfer and liability and stuff like that, but any professional company in any regulated industry should have professional indemnity cover. And quite frankly, if you're asking an important question to someone that hasn't got that, you've got to be asking yourself if you're asking the right people.
Yeah, excellent.
Yeah, so that the poll's still available in the chat if anybody wants to go into there and click and give you feedback on what we've delivered today. Nice comment from Colin saying great presentation, thank you. He's also asking what is our current turnaround for desktop assessments. Colin, the answer to that question is always at the top left of the rebuildcostassessment.com website. It currently says 10 to 12 days turnaround for that. So yeah, our team are incredibly busy. The numbers are going up month by month. But yeah, we're getting through them and getting through them at a pace, and also delivering those site surveys as well, which Ben alluded to earlier, which are particularly important when it comes to those higher value and complex listed properties and so on as well. Another question from Ty. I think Ty, looking at that, is probably one that we should pick up individually with you, and Ben, maybe you can contact Ty about that. It's an interesting question about how things have changed over the last 3 or 4 years. That RCAs have been carried out 3 or 4 years ago, and now, you know, when you look at them again, what the sweeping difference is between a lot of that. I think a lot of that will probably relate to what you've talked about earlier in terms of construction costs and the wild fluctuation in a lot of the material costs and things that we saw 4 years ago as a consequence of COVID, of course. So yeah. But I think, you know, if you don't mind, probably a good idea to pick that up with Ty individually. You know, of following webinar. And John saying, like others have asked, to copy the slides would be greatly appreciated, and absolutely. John, they'll be made available to you, as I said, on a specific landing page on the RiskSTOP website following this webinar, and we'll be back in touch with you about that. I don't know if there are any other questions that we've missed. I don't think so. If there are, we'll make sure that we get back to you on that.
Yeah, and most of you have my details. If you've got any questions on this, just email me or call me. I believe, yeah, there you go. Yeah. So any specific questions about the webinar, by all means, email the bulletins@riskstop.co.uk. Any questions directly for Ewan with regard to the services that we offer and so on, ewan.sanderson@rebuildcostassessment.com, and all of his information there as well. And as I say, the slides will be shared, so you'll be able to access that later. Okay, not bad. 9 minutes to go. We can let everyone get back to work. Hopefully you've found that really helpful. Hopefully it's provided you, many of you, with that all-important CPD as well, which I know is really important across the industry for everyone. Thanks to Ben and to Ewan for your contribution. And as I say, more than anything, thank you very much for joining us today. Always appreciate having you on, and we'll be back hopefully soon with another risk management related webinar for you to join in on. Great. Thank you very much, everyone. And we'll close off there. Thanks now. Excellent.
Bye-bye.
Thanks all. Take care.
Cheers.